I had one multi-billion multinational client. It really made a difference intraday when we received the MT940 as an intraday liquidity number, how much we could invest. We even moved to an API connectivity with JP Morgan because the MT940 was so big in some cases, multinational company, that it took 1 hour to read the MT940, process the MT940.
Wow.
With API, it took only one minute, so we saved 59 minutes. And that could mean 30-40 million extra on intraday liquidity, which I could invest overnight. 40 million times 2%, 3% interest.
This is Liquidity Talks, a live stream and podcast series designed to share the latest trends and updates from the world of treasury, liquidity, and risk. Join us as we power up the liquidity conversation.
Hello and welcome to our latest installment of Liquidity Talks, live stream and podcast. I'm Neville Roberts. I'm the CEO and founder of Planix, the market-leading fintech focused on real-time treasury, liquidity and risk. Our topic today is entitled The Push for Instant Cross-Border Liquidity. And of course, this is going to have a focus on corporate treasury. Welcome to all our audience today. Good morning, afternoon and evening, wherever you may be. Anyone in the audience can ask a question as we run through the session today. We've got 30 minutes for the podcast. If you ask a question, it'll come up or you put it on the comment section you see on the right-hand side of your screen, and I can take these as we go. And if we have any at the end, we can answer them after the session. If you ask a question, please let us know who you are and if you possibly can, your role, so we have some context to the question. Now, today I'm joined by our guest speaker, Patrick Kunz. So, Patrick, would you like to introduce yourself, tell us who you are and what you do?
Yes, first of all, thanks for having me on the podcast, Nev. I'm excited to be here. My name is Patrick Kunz. I'm owner and founder of Pecunia Treasury Finance, a boutique treasury consultancy firm focused really on the corporate treasury side. I help clients on the interim management side, but also projects on the broad spectrum of treasury, FX, cash management, liquidity, forecasting, and in this rare case also payments and payments formatting. Doing that for 12 years, so treasury is all I know really. I've always been in treasury. I will stay in treasury. That's where my passion is and my heart is.
Perfect. Well, welcome to the podcast today. We've already had a comment actually from Vincenzo saying hello from Amsterdam. And I have to admit, when I first started to talk to Patrick, I thought that's a German accent. And I thought you must be a Bayern Munich supporter because I always like to talk about football at the start. But no, do you want to tell your story, Patrick, in terms of where you are? And we were talking about Max Verstappen earlier, weren't we?
Yes. It would have been much more fun if we did this last year, talking about Max Verstappen, and I think the Dutch soccer team, the below 21 team, is now doing pretty well. Half final in the European Championship. I'm 2 hours out of Amsterdam. I'm in a border town close to Germany.
Right.
But really, in treasury, most of the roles are hybrid. Some of them are remote, especially the part-time, the treasury management system implementations. They can definitely be done on a consultancy remote basis. So location has become less important after Corona. Treasury teams are relatively small, so it's quite easy to support them. Europe has become so well connected and small. It doesn't matter if I'm in Netherlands, Munich, or the rare case of Liverpool.
Indeed. Right. Let's get straight into the topic today. Look, so first up, we talk on this podcast a lot about banks and real-time liquidity need for banks. But what's driving the corporate demand for faster liquidity today versus what it used to be?
Yeah. So the faster, the better in any case, and that also goes for payments. Of course, from a treasury perspective, on the outgoing side, I don't care too much. If my payment is gone, it's gone for me. If it arrives at you tomorrow or the day after, I prefer it arrives faster, but for me it's gone already. But on the receiving end, of course, I'd rather have my money quicker. then I have to wait 1 more day or 2 more days. And it's 2025. I can send an email and Bitcoin or everything to Australia in seconds. But sending euros to Australia still takes 2 days. Okay, with a bit of luck, 1 day. That's outdated. So as a treasurer, I want to know where my money is, how much I'm getting in, how much I paid out, and how in between the cash in transit part, where's my money? Especially with the big tickets, if I'm doing M&A transactions or big fundings into company, if I'm sending 100 million from A to B, I rather have it be instant, so I know it already arrived. I get nervous with the big cash in transit numbers, so the faster the better.
And I guess when I was just hearing that, then the forecast is a very important part of that. So it may take a day, it may take 2 days. So the more accurate the forecast, what receipts you receive today, that's really key, isn't it?
Yes and no. For an average size corporate, it doesn't matter too much if it arrives today or tomorrow, as long as it is in my forecast.
Right.
And the corporate treasury is less concerned about intraday liquidity and a bit about end of day liquidity, because at the end of the day, I have to decide as a treasurer how much excess cash do I have, and do I keep it on my bank account, keep it in my cash pool, or should I invest it in a money market fund or deposit to gain extra interest? I had one multi-billion multinational client. It really made a difference intraday when we received the MT940 as an intraday liquidity number, how much we could invest. We even moved to an API connectivity with JP Morgan, because the MT940 was so big in some cases, multinational company, that it took 1 hour to read the MT940, process the MT940.
Wow.
With API, it took only one minute, so we saved 59 minutes. And that could mean 30-40 million extra on intraday liquidity, which I could invest overnight. 40 million times 2%, 3% interest. Made a positive impact. But this is a multinational exception. The average intraday liquidity client is a couple of million. The impact is less big, but it matters. It should be in my forecast, definitely.
I was just thinking then, I've only worked for one corporate, proper corporate in my life. It was one of the largest retailers in the US in the late noughties. And in those days, I don't think we did anything with our cash. We just had it in the bank account. Then we started to use money markets, but very little attention at all. And we were pretty much a cash business as well. So times moved on a lot, and I joined just after 2008. So ever since then, I think it's probably been gaining traction in terms of the importance.
It's still an often forgotten piece that cash at bank account is the end of the line for the treasurer. Definitely not. It's like, how much is that cash earning you? And I'm not saying you should maximize your interest income, because there's counterparty risk, but there's also counterparty risk having your cash sitting at a bank account at that certain bank level. We've seen Credit Suisse go bust in a couple of days. That was Credit Suisse with I think it was an A+ rating. Lehman Brothers went with an A-. It's still risky, so you might as well make some money and don't put your eggs in one basket.
All right, good. So let's talk about corporate treasurers, right? So, how have their expectations evolved in terms of intraday liquidity access and transparency over the last, 2, 3, 4, 5, 10 years?
Yeah. So for corporate treasurers, we are a bit of followers there on what's out there in the market. What do banks offer? We did ask ourselves the question: do we really need it, and is it going to solve a problem? I think the answer is a bit of no. We don't really need it, but if it's coming, and it is coming, then we definitely want it. But the problem is it doesn't stop at Treasury, because if the Treasury goes instant intraday liquidity, if it stops at Treasury, it's of no value, because the transaction come in. Yes, I can do a bit with my liquidity, but But if my accounting department doesn't process these transactions intraday, and they're still going to wait for the MT940 for the end of day statement, then it's instant real time for Treasury, but it's not instant real time processing for the accounting department. But it's a bit of chicken egg. What comes first? Do treasurers push for it? Are banks pushing for it? And very important, consumers. What are they going to do? I told you I'm from the Netherlands. Instant payments here, for at least for private payments, is pretty normal. So we've gotten used to it, and clients act like that. I had one client where they sold cars online as well. A client bought the car online, paid for it, and went to the depot. He said, "I paid for it. We have instant payments in the Netherlands, so you have my money. So the car is mine. I'm here to collect my car." And of course, the company wasn't ready. They said, "We haven't even checked the bank account yet." So they checked with me as treasurer. Did that money arrive? And I was like, "But that's intraday. We don't process intraday. Of course, I can check on the bank account, but that's not a normal process. I don't want to be doing that every day." This was 3-4 years ago. It could be different now. So it's also clients pushing for it. So it's this combination between what does consumers, clients want, treasurers, what do banks offer. But the trend is clear. We're moving to a 24/7 intraday as fast as possible.
No, exactly. We had a question in. I actually got two from Dan Feeney. Hi, Dan. As instant payments proliferate, how important is confirmation, aka verification of each and every payee?
Yes, VOP. I think it's going to be messy at the end of this year. I love VOP. Again, in the Netherlands, we have VOP already. Banks are offering it to me. And I use it. I use it as testing. And for manual payments, they are amazing because I send in a payment. I type in Roberts only, not Neville, and the bank tells me, "Do you mean Neville Roberts?" Because that's the name of the bank account, and it gives me a feeling of trust. Yes, I love that. But doing that with a bulk payment with 1,000 payments in there. How much are going to be a true 100% match? Maybe 80%, maybe 10% is going to be a near match. How are the banks going to deal with the near matches? And how are they going to deal with the no matches? Are they going to cancel the no match payments? Do I want that as a corporate? Do I want them to be cancelled because I'm going to have so much failures in payments? I'm hearing treasurers saying opt out might be the option. Or might be the start, because I don't want it to be messy. Between banks, love it. We should definitely do VOP. For bulk corporate payments, I'm not sure. I like the concept, the idea. Totally agree with it. In practice, it's potentially a bit messy.
All right. So when we think about the current banking infrastructure, what's your view in terms of the major, most significant friction points that kind of hinder real-time liquidity from a corporate's point of view these days?
No, I think we're moving in the right direction. I'm a bit worried about not only the business model of financial institutions, banks, but also their ability to handle their internal liquidity. What if all the payments would be instant, real time? I was making fun with another treasurer. I could be funding my bank account 2 minutes before 12 o'clock. That means my end of day cash position is say 10 million, and 2 minutes past 12, I'll be sending that 10 million to the UK where it's only 11 o'clock. I'm going to wait an hour, have my 10 million in the UK. Do I get interest on this account because it was at midnight? And I just thinking out loud that will be an interesting mechanism. So yes, instant is really cool. If everything is instant, will it get messy? Because I could send 5,000 payments in 1 hour going from one bank account to another, making a huge circle. Can the infrastructure handle it? Can the bank funding handle it? Because the treasurer is not going to be there till 12 o'clock at night to secure his end of day cash position with his own funding. So that worries me a bit. Luckily, it's going slowly, step by step, and not big bang. Otherwise, it's going to be messy.
Yeah, one of the things we've worked with some corporates in the past, and one of the hindering points was that a more real-time or intraday liquidity view is really going to come to the fore when the open banking APIs on the corporate side are in place. So they're on the retail side, but because they're free, that's the point at when we'll really see this accelerate, because corporates don't like paying for SWIFT, and probably only the top 50, 100 corporates in the world would have SWIFT in a way that a normal SWIFT enabled platform could work. So do you see that being the case when open banking APIs proliferate for corporates? Then we'll see a lot more of this.
Unfortunately, I don't want to say it failed, but it hasn't brought the promises it
Right.
promised. Because yes, the PSD2 API, the free API, how you call it, the open banking API, that one works okay-ish for bank account information, my bank balances.
Yeah,
that works. For payments, not too much, because the open banking API, it works for single payment. Most of the banks don't even offer it for bulk payments. So I have to move into the premium API space, which are also often there. But if I'm a corporate with 15 banks, I have to be looking at 15 different APIs. That's exactly. Not my expertise. Okay, it's a bit of my expertise. So the average corporate treasurer doesn't know anything about APIs, or not too much, doesn't have the knowledge. It's too techy. So they don't feel like looking into 15 APIs. They rather go the Swift route or the host-to-host route, which is easier. Don't get me wrong, I love APIs. They would do much better than a simple host-to-host. Much more flexible, they are faster, a bit more modern. But the old school method, host-to-host, Swift, it still works. So never change your winning team. Why move to APIs? And that's the problem with APIs. Nobody really owns them. The banks were a bit forced to offer them. Then they were frustrated that they had to offer them for free. Then they said, okay, exactly. but which I get. Then they said, okay, we'll offer premium APIs, but the banks offer their own API, not as an open source, because I've seen APIs which are amazing from big commercial banks. I would say give them to other banks, so you have the same API, all of them, and you can still charge money for them. We're willing to pay, not too much, by the way, but we're willing to pay. But we want uniformity. We want not a Citi, a BNP, ING, all those APIs. We want one API to rule them all. That's going to help API adoption, and that would help instant payment adoption or faster payment adoptions.
So look, considering these new liquidity demands and what banks provide, how are corporates evaluating their banking partners about choosing the right one, trying to work with the ones you've got? How are they thinking about that?
Yep, it's part of it. The main criteria of evaluating a banking partner is still how's the mapping? How does the mapping of the bank, the worldwide availability of bank accounts, countries, match with my needs as a corporate treasurer? For example, I had one client active in every country in Europe. They were looking for a new bank. I can't work with a bank who is only present in 30-40% of these countries, because I would need to find 2 or 3 more banks next to it. So I need to find a bank who's present in 80, 90, 100% of these countries. Key criteria for me. But that's only step one. Next step is how are your service level? How is your pricing? How's your infrastructure? how are you set up globally? How safe are you? Something about rating, and what. But also, one of my RFP criteria would be how are you technology? How technology advanced are you? Do you offer APIs? Do you think along with solutions, or are you a more traditional bank who says, okay, that's not for us. If you want an API, look for an aggregator or look for somebody else. We're open to talk to them, but not via us. I would prefer the more technologically advanced financial institution, to be honest, because I expect that from them.
No, sure. Does that tend to favor the larger banks, the more global banks in your mind?
Not necessarily. I know some Nordic banks who are only active in the Nordics. They have amazing banking portals and even TMS-like portals, which they charge a premium for. But as a portal, they do the trick. They're not very bank agnostic. Setting up different banks, it's a bit more of a hassle, and I might be looking at more independent products. But some smaller-ish banks, and I'm not talking local banks, but some more regional banks, they have quite a nice tech stack.
Okay, great. So I was just thinking as you were talking through that, can you share any real-world examples of where delayed liquidity access or liquidity issues impacted operations or decision makings or insight that a corporate might have?
Yes, I've quite a few. I'm still
Without
finding
mentioning names.
No, I'm not going to mention names. That would hurt them. I'm still surprised if I talk to new clients, potential clients. As a treasurer, I'm forward-looking. Yeah, that means the past. That's for accountants. I don't care too much about it. That already happened. I want to know, and that's my starting point. 9 a.m. in the morning. How much cash do I have now, and where is it? And in an ideal world, I push on a button and I have my cash position. That's the ideal world. You might need to do some collecting of information. I'm still finding clients who can't answer that question properly. How much cash do you have now? If you can't answer that as a treasurer, you're doing things wrong. And it often means that they don't have proper access to all of their bank accounts. They still use banking portals with scattered access. Some clients struggling with idle and trapped cash. Some African nations, US dollar liquidity is low. It's hard to get the cash out. So still looking at cash, but it's trapped. You don't have access to it. That's a big issue now. So visibility and accessibility, those are the key issues my clients and I as a treasurer are looking into.
Got it. Okay, let's talk about AI. So, where do you see AI playing the most immediate role in improving liquidity forecasting, operations, and also tying into a question from Dan again, our corporate treasurers investigate use case around agentic AI for payables. So, how's AI playing it in this space from what you've seen?
Yes. So AI is never the goal. AI is still a tool. It's a machine that's going to help me achieve my goal. But the machine is rule-based and it's smarter than I am, at least on the rules. It can see patterns, it can see logic, which I cannot see in an Excel sheet that's with 10,000 rows in it. So the biggest use case, you mentioned it, cash flow forecasting. If I have the correct data to feed it with a bit of machine learning, AI logic, it can see patterns there, and patterns which are not visible by me. I still have to check if the output is logical. So it's sanity check. I'm the brains, AI is the tool. So cash flow forecasting, many use cases, I've seen it where machine learning really adds value and we can optimize our liquidity. Just by AI saying, you know what, these invoices, they are payable on day 30. I see on a quarter end, you pay them late for obvious reasons. You pay on day 40, so you're going to have more cash. this other client, this AR client, that's a big multinational, I'm seeing in the trends, they always pay 5 days late. On year end, they're paying 10 days late. So I would adjust your forecast accordingly. And that makes pluses minus that your range of error in the forecasting gets much smaller, and therefore your cash availability is more predictable, which helps the treasurer has less sleepless nights, and therefore optimize their cash investments. So that's the obvious use case. I'm seeing many use cases of AI in a bit of KYC, data collection, on the agentic AI for AP. Not sure if I already need that, because in my opinion, AP can already be fully automated. I have payment hubs, treasury management systems, which I can connect to my banks for payments. I can connect it to my ERP system to get the information. In an ideal case, I see payments or invoices being authorized in the ERP system. If you can set up rules in the ERP system, if they are fully authorized and they reach the due date, then they are batched automatically. The batches are sent to the TMS or payment hub. Either there's another authorization there from the treasurer, liquidity checks, whatever, and then they are automatically sent to bank. Basically, that's already that's not an agentic AI. That's just a fully automated RPA-like automated system. I've set that up multiple times already with clients. I don't need AI for that. I can just automate that. That's already there for years. I don't need AI for that. The logic behind that is nobody should touch a payment file. Nobody should be doing manual payments. Okay, you never get to 100%, but if you're doing more than 15 to 20% manual payments or doing batches manually, then there's room for improvement. Happy to help you. It's just also from a risk perspective. Nobody should be touching payment files. Give me a payment file. It's a XML format. I know exactly which tags I need to change to circumvent the checks, and I can be fraudulent if I want to. If nobody can touch payment files, that's already a safeguard there. So automate what you can automate. I think that's the best answer to this question.
Got it. Perfect. Look, we are running out of time, but looking ahead, what does the ideal liquidity experience look like for corporates in, say, the next 3 to 5 years?
Yeah, ideally, I don't need all my payments to be instant. I would love them to be intraday at least, because that helps in my predictability. Not only euros, but also cross-border. Maybe even cross-currency, because I'm seeing trends in CBDCs. They can be fast, currency-wise. We live in a world where we can send emails and information in seconds. We can't send money in seconds. It should be the goal where we can send money, irrespective of location, currency, around the world in hours. It doesn't have to be 10 seconds. It doesn't all have to be instant. If it's within 1 or 2 hours, I'm perfectly fine with that. But we have to move away from this T+2, T+1 settlement, correspondent banking. If the money is lost, I don't even know where the money is, with which correspondence bank it is. I have examples where 40 million was lost, and I'm like, receiving bank, sending bank, no, I don't have it. I've sent it away. Correspondent bank cannot find it. It's money is somehow lost in translation, and we'll still find it. But as a treasurer, I always want to know where my money is, even in the transit. And if this transit is only a few hours, I don't have to care too much where my money is in transit. I'm going to hit F4 refresh in a couple of hours, and the money is going to be there. So I really hope 3 to 5 years that much more payments are faster. Don't have to be instant.
Got it. Just one comment here, because I thought it was interesting from Vincenzo. It said, agree with Patrick, technology will become the competitive advantage to select a global bank. I was just reflecting on RFPs that we receive, actually it's normally all about the bank, but we've started to get probably in the last 2 or 3 years questions about their corporates. So questions asking for us about how we would service not just them, but open access or portals for their corporates or their Vostro accounts as well. So we're seeing more of that too. And as we answer, obviously they can help to answer to their corporate. So I would agree with that. We are unfortunately running out of time, but one last question we always end with, Patrick, and you can comment on that as well. But if you had one key takeaway for listeners today, what would it be?
Yeah, but I'm thinking back on the discussions we had. I think look at your cash, look at your banking infrastructure, look at how you do your payments. I think the triangle between cash, payments, infrastructure, that determines how modern your treasury is. Definitely have a look at your treasury anyway, because a more optimized treasury, a more modern treasury, there's a positive ROI on it. I promise you, in 8 out of 10 cases I'm seeing, treasury optimizations pay for itself within half a year to a year. They are cash positive because the optimized structure is going to save so much money or risk that it pays for itself. So definitely have an optimized treasury is going to help so many headaches within your company, and that means maybe changing banks or going to a more global bank, or doing payments faster or more automated. I think that's the key takeaway here.
Perfect. Thank you. So unfortunately, we have run out of time today. So thanks very much, Patrick, for joining us today and sharing your views. If anyone asks questions after the event, please feel free to do so, and we'll answer those for you later. That concludes our latest Liquidity Talks live stream and podcast. We'll put the podcast on LinkedIn, Spotify, Apple Music as usual, and other media outlets and streaming services very soon. Thank you very much for joining us today. Look out for our next podcast in July. My name is Neville Roberts. Thank you for tuning in, and goodbye.
You've been listening to Liquidity Talks. Don't forget to subscribe to stay updated on the latest developments and industry opinion from the world of treasury, liquidity and risk.